All right, listen up, because what I'm about to tell you is something that literally just happened in the silver market. And honestly, I'm still processing it myself. Yesterday, for the first time in history, silver closed above $80 an ounce. And yeah, I know what you're thinking, that's insane. But here's the thing. Today, we're seeing a pullback to around 78.19, down about 4%. And before you panic, let me tell you why this isn't actually a bad sign at all. When silver was sitting at $17 an ounce back in the day, a $3 drop would have been catastrophic, like 20% of your investment gone. But now, that same $3 drop is only 4%, which, in a market this volatile, is pretty much just Tuesday. So the math actually works in our favor now, even when we see these corrections. But hold on, because that's not even the most important thing happening right now. And what I'm about to share with you is something that's affecting every single person who's actually trying to buy physical silver, not just watching the numbers on a screen. And trust me, this is where things get really interesting. See, there's a massive disconnect happening between what you see on the charts and what you actually have to pay when you walk into a shop or go online to buy a silver round, eagle, or bar. And I've been tracking this closely because it's affecting my own purchases too. Physical silver premiums are exploding right now, and I'm talking about the extra money you pay over the spot price. And this isn't just me noticing this. There's actual data backing this up that I want to show you. I found this article that breaks down exactly what's happening, and it talks about how silver held above 80 at settlement before pulling back. But that's not the juicy part. The real story is buried in the section about physical demand. The article says retail energy is broad and coming from multiple directions, which basically means it's not just us seasoned stackers who've been in this game for years, but there's a flood of new buyers jumping into the market right now. People who've never touched silver before are suddenly scrambling to get their hands on it. The article literally says the current wave of physical interest is not a single group discovering silver. It's a blend of longtime stackers, new buyers reacting to price action, and communities that have been watching this story unfold for years. And they specifically mention big social communities like Wall Street Silver and a wide range of YouTubers who've been talking about why silver feels so undervalued compared to its role in industry and monetary history. Now, I've said this probably 100 times on my channel. I have absolutely no idea what silver's price is actually going to do tomorrow, next week, or next year. I don't predict prices because that's not what we do here. But what I have said consistently is that I personally felt silver was undervalued for years. And seeing what's happening now, honestly, it feels a bit vindicating, like maybe we weren't crazy for stacking all this time. But here's where it gets really wild, and this is the part that should make you sit up and pay attention because it's affecting your wallet right now. The article talks about dealer messaging being a visible stress gauge, and what that means is we can actually see the strain in the market just by looking at what the big online retailers are posting on their websites. And when I went and checked this myself, I was blown away. Look at this. SD Bullion has a banner saying historic silver price action will cause processing and shipping delays. Monumental says we remain fully stocked, but high demand is causing modest shipping delays. JM Bullion warns that high demand will cause slight processing and shipping delays. And AppMax straight up says record demand may extend call wait times and delay shipping about 2 days. I checked basically every major online bullion dealer I could find, and almost every single one of them had some kind of message about processing delays. And that right there tells you everything you need to know about what's really happening behind the scenes with physical demand. This lines up perfectly with what my local coin shop owner Josh told me in our video chat on Monday, and his insight was absolutely fascinating because he said something changed recently. He told me that in the first week after silver jumped over $70, when it shot up really quickly, he had a bunch of people coming in and cashing out of their silver, taking profits, getting out while the getting was good. But then something shifted. Josh said that trend completely reversed, and now he's seeing a massive influx of people who aren't selling at all. Instead, they're buying like crazy. And we've now seen easily over 2 weeks where silver has remained stable above $70 an ounce. Now, I'm not saying 70 is definitely the new floor. I don't know that for certain, because again, we don't predict prices here. but it's looking like it could be, and that stability seems to be making people feel more comfortable about jumping in, which is driving even more demand. But unfortunately, and this is the part that nobody wanted to see happen, this surge in demand is causing not just a rise in spot price, but also a massive rise in premiums, and that's the real kicker. The article explains it perfectly when it says, price is what the screen says, premiums are what the real world demands, and in moves like this, premiums can expand quickly because retailers have to manage replacement cost, volatility risk, and inventory gaps all at once. That's exactly how you end up with a market where spot price can pull back, but certain physical products stay sticky on the price, because the physical price, which is spot plus premium, is what you actually have to pay. So I did something that I think you'll find really eye-opening. I went to 8 different online retailers and recorded their premiums on silver rounds, silver maples, and silver eagles. And what I found honestly shocked me, even though I expected premiums to be higher. Just a few weeks ago, silver rounds were only a couple of dollars over spot. It was beautiful. But now look at what we're dealing with. For silver rounds, the lowest premium I found was $39, and I'm pretty sure those were on pre-order, so not even in stock yet. The next lowest was $419, but then it jumped to $509, $629, $639, $799, $899, and the highest was $849 over spot. And when I averaged all 8 retailers together, the average premium for a 1-ounce silver round came out to $6.04 over spot. And now I know what you're thinking. That sounds terrible, but let me give you some perspective here. That $6.04 premium actually represents less than 10% of the current spot price. And back in 2017 or 2019, before everything went crazy, we were paying around $1.50 over spot for rounds, which sounds way better, right? Except that $1.50 was on a $15 spot price, which means we were actually paying 10% back then too. So weirdly enough, on a percentage basis, we're actually paying less now than we were back then, even though the hard dollar amount looks way worse. And that's a mind-bending reality that I'm still wrapping my head around. Now let's talk about silver maples, because the story gets even more interesting here, and I think you'll be surprised by what the numbers show. For Canadian silver maples, the premiums ranged from a low of $439 all the way up to $999, with most dealers sitting somewhere between $7 and $9 over spot, and I saw $749 twice, $799, $899, $979 showed up twice as well, and that $999 at the top matched the highest premium I saw for rounds. And when I averaged everything out, silver maples came in at $8.24 over spot on average. And again, if you compare this to 2017 when we were paying around $2.50 over spot for maples, that $2.50 on a $17 spot price was well above 10%. So we're actually in a similar percentage range now, even though the raw numbers look way higher. Now we get to silver eagles, and this is where things get really spicy, because American silver eagles have always carried the highest premiums, but what I found was still shocking. The absolute lowest I saw was $605 over spot, but those were on pre-order and not in stock. Same with $789, those weren't available for immediate shipment either. And of the eagles that were actually in stock and ready to ship, the cheapest one was $949 over spot. From there, premiums ranged all the way up to $1399 over spot, with prices at $10.95, $11.95, $12.95, and $13.95. And when I averaged all 8 retailers together, the average premium for silver eagles came out to $10.73 over spot. Now here's the crazy part that puts this into perspective. Back in the old days when spot was $17, we were paying around $3.50 over spot for silver eagles, and $3.50 on $17 is more than 20% premium. So if we were paying 20% today on a $78 spot price, we'd actually be paying $15.60 over spot, which is higher than any of the premiums I found. So technically, on a percentage basis, we're paying less now than we were back then for silver eagles, but I'm not going to lie to you, it still feels brutal to pay $6, $7, $8, $9, $10, $11 or more for rounds, eagles, and maples. It feels kind of like what we were seeing in 2023 during that weird period, except now spot price is way higher, so the absolute numbers look even worse, and it's hard not to feel like you're getting squeezed even when the math says otherwise.
Now, I know there are probably some dealers watching this who are going to be frustrated with me for making this video, and I want to be clear. I get it. I really understand the position dealers are in right now. If you're a dealer charging $3 over spot for rounds, that's only 4% margin, and silver is moving more than 4% almost every single day right now, going up and down like a roller coaster. So I totally understand why dealers would want to protect themselves from getting caught with inventory they paid high prices for that suddenly loses value. The volatility makes it risky to keep premiums low, and I'm not going to sit here and pretend like dealers are just being greedy, because running a business in this environment is legitimately challenging. But here's my one concern, and I think it's a fair one. If dealers are going to charge $5, $6, $7 or more over spot for rounds, eagles and maples because demand is so high and they need to protect themselves, then I really hope that on the other side of the table, what they're paying customers who are selling is going up proportionally as well. If you're charging $7 over spot when someone's